Hey everyone, it's Richard. You're watching The Plain Bagel. It's week 5 of Donald Trump being in office. It's been quite the kickoff to the presidency, to say the least. With President Trump signing a record number of executive orders since taking the position in January, spanning everything from the potential kickoff of a trade war with Canada and Mexico to the banning of the purchase of paper straws in government buildings. And the number of unconventional moves and updates coming from the White House have really been unrelenting lately. And I get it. We haven't really heard about anything other than Donald Trump the past few weeks. And I don't intend to keep covering everything that comes out of the White House. I know the last video was on Donald Trump, but we've got another 4 years of this, and I can't do it. But there is one executive order that the president has signed that I think touches on an interesting financial topic: a plan for establishing a United States sovereign wealth fund. An executive order the president signed on February 3rd that's drawn a lot of discussion, interest, and even a bit of criticism. Now, if you aren't familiar, a sovereign wealth fund is essentially just a pool of money that's owned and controlled by the government that it uses to invest in things like stocks, bonds, and different private assets, which naturally got some excited about the prospect of the president YOLOing the nation's wealth into whatever cryptocurrencies they hold. But all naturally raises a number of key questions. How would this fund be funded? What would be the point? And will Donald Trump announce a Discord membership where you can follow his Robinhood trades? All equally important questions, and ones that we'll strive to answer in today's video. And while I can't comment on whether we'll see a Donald Trump trading course anytime soon, we'll look at what we've seen from the US so far, how other sovereign wealth funds function, and what it could mean for the US and US markets as a whole. And probably the best place to start is with the high-level information on what sovereign wealth funds are and how they're typically used. Now, as mentioned, sovereign wealth funds are really just pools of money that are state-owned and used for different investment purposes. And while the idea, obviously, of a state controlling money and investments is nothing new, the modern sovereign wealth fund as we know it today has really existed since the 1950s. And collectively, sovereign wealth funds currently manage in excess of 13 trillion US dollars, with Norway having the single largest sovereign wealth fund at 1.8 trillion US dollars. And much like a middle-aged family man approaching retirement, most sovereign wealth funds take a pretty balanced approach with their asset allocation, with, according to State Street, the average sovereign wealth fund having a pretty equal distribution between public stocks, fixed income, and private projects, with stocks actually being the largest asset class, with the US stock market specifically being a top destination for sovereign wealth funds, much like most other investment vehicles. Something you can actually see when you look at the top shareholders for some large publicly traded stocks like Apple, where, for example, you can see here that just over 1% of the company is owned by the institution that manages Norway's sovereign wealth fund. Now, how these funds have actually performed over time naturally varies, but historically, according to State Street again, they've seen an average return over a 10-year period of 6.1%, which might not sound very good, but it's just below a benchmark 60-40 portfolio, meaning a portfolio that's allocated 60% to stocks and 40% to fixed income. Now, outside of earning a return simply for the sake of earning a return, sovereign wealth funds usually serve two main purposes. The first being to offset government costs and liabilities, with the idea being that the fund can use its returns to help cover expenses that would otherwise need to be paid by taxpayers. Norway, for example, whose sovereign wealth fund is called the Government Pension Fund Global, is actually able to cover 20% of its government budget by spending just around 3% of its fund annually. So a very clear financial incentive to have a sovereign wealth fund. But the second purpose is that the fund itself can be a tool for fiscal policy to help enact government action. It can be used to directly invest in projects or industries that a country wants to develop, which is how Saudi Arabia, for example, uses its own fund, with it being known for investing in giga projects that otherwise would probably struggle to raise capital. They can also be used to help smooth out economic and market fluctuations, using money that's raised during the good years to help offset the bad years. And finally, of course, the fund can serve a diplomatic or political purpose, being used to either strengthen ties or otherwise increase a country's influence globally, which is how China, for example, which has the second largest sovereign wealth fund in the world, the Chinese Investment Corporation, has used its fund with projects like the Belt and Road Initiative, whereby it's invested in infrastructure in 150 countries. So you can see generally how sovereign wealth funds are used, and both these purposes actually line up with Donald Trump's executive order, which highlights that the US's fund will be designed to promote fiscal sustainability, lessen the burden of taxes on American families and small businesses, establish economic security for future generations, and promote United States economic and strategic leadership internationally. Now that's about where the details around the fund actually end, with the order itself simply instructing the Secretary of the Treasury and the Secretary of Commerce to develop a plan for how the fund will function within 90 days. So we're very early on with the plan, and while the idea of a federal sovereign wealth fund in the US might feel alien or bizarre, it technically wouldn't be the first sovereign wealth fund within the United States. A number of states within the US technically do have their own sovereign wealth funds, albeit they're often called permanent funds, with these including Alaska, New Mexico, North Dakota, and Texas, with these states using the returns from these funds to often help pay for state operations and specifically education. Albeit these funds are individually much smaller than what Trump seems to be planning with the US Sovereign Wealth Fund. Alaska, for example, has the largest state sovereign wealth fund in the United States at over $80 billion in assets, whereas Trump has talked about catching up to Saudi Arabia's $1 trillion sovereign wealth fund with his own plans. So clearly some pretty big aspirations here, and so far probably sounds like a decent idea. After all, most individuals strive to eventually survive off of a retirement nest egg of sorts. Why not set up the US government to do something similar with the sort of trove of treasures? But as you would imagine, there have been a number of risks and concerns raised with all this, with one of the biggest questions being, with what money? After all, sovereign wealth funds have typically emerged out of countries that have excess savings that they naturally want to deploy and make use of, which is why you commonly see them among resource-rich countries who at times own their resource production operations at the state level. It's also why the states that have a permanent fund in the US are ones that historically have run budget surpluses. At the federal level, however, the US doesn't have excess savings. The country has had a budget deficit since 2001, meaning that they've spent more money than they've collected in taxes, and their debt load currently represents roughly 120% of their domestic product. And of course, most resource production is privately owned, versus Norway and Saudi Arabia, where the government owns a significant stake in operations. Now, there are some countries like China, for example, that do have sovereign wealth funds despite also running budget deficits. So it's not to say it's impossible, but it does mean that the US will need to take that money from somewhere else to get things started, which generally speaking leaves them three options. The first of which is to increase taxes, effectively have citizens chip in a bit extra to get things off the ground, which generally speaking likely to be unpopular, especially given Trump's conflicting objective to try and lower taxes in the United States. And while yes, we have seen the president slapping tariffs on imports faster than a smooth soloist, the president has shown a willingness to postpone or otherwise negotiate around tariffs, making it unclear whether it would be a reliable funding source or more of a bargaining chip. Now, the second option is that the US could do what it does with most other expenses and simply borrow to cover it, either with a typical treasury issuance or a separate form of debt that would be specifically tied to the sovereign wealth fund, which some have dubbed mega bonds. However, that's also likely to prove unpopular, given that doesn't really help the concerns around the government's growing deficit, and given that the 10-year treasury yield currently sits at 4.5%, which essentially represents the interest rate the government has to pay on its debt, and the fact that this rate would likely rise if the government were to suddenly try to raise, say, $1 trillion for a sovereign wealth fund, it'd make for a pretty risky leveraged investing approach, especially when compared to the historical performance of other sovereign wealth funds. It naturally wouldn't leave a lot of room for error or bad years. Which brings us to the third option, and the one that the government seemingly has been alluding to using for this fund, which is that they could repurpose other assets owned by the government for this fund, either by selling or leasing the land, buildings, or natural resources it currently owns, or just taking money from other funds. Now here, it is unclear how much money could ultimately be raised without impacting critical operations in the government. The White House has highlighted, for example, that the federal government directly owns $5.7 trillion in assets and indirectly holds much more, with some putting the total value of assets held by the United States at roughly $100 trillion, but only about $1.2 trillion of those assets are in cash or gold, with liquid assets often being used for other key purposes, such as the $200 billion exchange stabilization fund that helps manage the US dollar's exchange rate, and the $2.8 trillion Social Security Trust Fund, which obviously it's already accounted for by the 150-year-olds. Now, interestingly, the US does already have an investment corporation known as the Development Finance Corporation, which, despite the crackdown on US aid in the States, currently seems to continue to provide capital to development projects in foreign countries. So we might see a move to repurpose those assets, but even there, the fund only has $20 billion in assets as of 2023 year end, over half of which is tied up in liabilities owed by the institution, and most of those are likely tied up in very illiquid projects, things like infrastructure and health projects projects in foreign countries, which naturally could prove very difficult to sell. Still, despite these roadblocks, it seems that this is the government's preferred method for starting the sovereign wealth fund, with Treasury Secretary Scott Bessent indicating that the Trump administration will, quote, monetize the asset side of the US balance sheet for the American people. Now I know what you're thinking, Richard. What about secret option number 4? Elon Musk. Specifically his Department of Government Efficiency that's aiming to save trillions of dollars from government spending. If he can get the government to stop investing in magic, then we can magically fund this fund. And certainly we could see some savings come from Elon's efforts here. But given their track record, it does seem unlikely that we'd see anything even close to what the fund would need to get the kind of size that Trump is looking for. With DOGE's recent claim that they saved the government $55 billion in canceled contracts recently coming under scrutiny due to the group only providing itemized evidence of $16 billion of savings, and one of those key items, an $8 billion contract, turning out to only be worth $8 million, raising concerns that the savings promises are highly inflated. So even before considering the friction costs caused by canceling all these contracts, how much of that might end up being reversed, and how much slack is even available to ultimately be saved here, it does seem likely that any savings that are realized will just be eaten up by other tax or spending initiatives. Meaning, again, sadly, the government will either have to borrow for the fund or take assets from somewhere else. As for what we'll ultimately see the fund invest in, so far, really the only guidance we have is maybe TikTok, if the US ends up taking an ownership stake in it. But there also being a lot of speculation that given that a number of members of Trump's administration are very pro cryptocurrency, that we could see a cryptocurrency investment. And listen, maybe, I have no idea. But it would certainly be a typical sovereign wealth funds to date, as far as I'm aware, haven't invested in cryptocurrency assets, in part because the goal isn't often to speculate, but rather to pursue these strategic initiatives that help, again, develop economies and different sectors. It's also why you wouldn't likely see just a buy and hold strategy of an S&P 500 ETF within the fund. And you also do typically see these funds really focus on diversifying, given the risk in political backlash that can come from negative performance of effectively taxpayer money. Then again, who knows? Anything's possible. We could see an 80% allocation to Trump coin and 20% to Libra. And interestingly, the Treasury does actually already hold $20 billion worth of seized Bitcoin. So maybe that ends up being rolled into the sovereign wealth fund for a 2% allocation, assuming very optimistically that we actually start things off with a $1 trillion fund and the money isn't used for a different purpose. Which does, in a way, bring us to the last kind of big question mark around all this. What's the point? The US government has long had the capacity to invest in different initiatives via legislation through Congress. And the sovereign wealth fund does come with a number of risks. There's, of course, the investment risk of losing money. It's naturally interventionalist if you use it like a rainy day fund, like some countries do, which could distort economic activity and create inefficiencies, which on the same note, any investments the government does make would likely inflate valuations for that sector, could lower expected returns for future investors, and potentially contribute to asset bubbles, especially given that the US stock market, again, already a destination for a lot of sovereign wealth fund money, currently has very high valuations. And of course, without the right checks and balances, a massive pool of money like this could be abused. With us seeing many examples of corruption with sovereign wealth funds, especially in autocracies, with us seeing examples of sovereign wealth funds funneling money into failed projects and even family members of those involved. And naturally, some do have concerns around President Trump and his circle of potential beneficiaries. So there are certainly downsides and risks to this approach. Like I mentioned, the government does currently have a method for investing in different initiatives, and some are concerned that the president is using this sort of sovereign wealth fund as a way to potentially bypass the Congress's power over the purse. Nonetheless, despite all these downsides and risks here, and whether you agree or disagree with whether it makes sense, it's worth taking the idea seriously. Not only because, Trump might go ahead with it anyway, but we've seen a similar idea floated under the Biden administration, and it's currently something also being pursued by countries like France and the UK. And while it is a very unique example, given the size of the fund and the fact that over half of the money in it has just been accumulated via returns, the Norway Fund is an example of how a sovereign wealth fund has been used pretty successfully by government to monetize its limited natural resources to benefit its citizens. So while people obviously have mixed feelings around President Trump, the idea itself isn't inherently controversial. But of course, the devil is in the detail. And the biggest questions and concerns remain around how the fund will end up being implemented and, of course, used and managed. And there, We'll just have to wait and see how things develop. Until then, hopefully this video gave you a bit more information about sovereign wealth funds and the US's idea to try and implement one. I hope you found it helpful. If you did, please make sure to like, subscribe, all that good stuff. It does help the channel tremendously. And let me know your thoughts on a US sovereign wealth fund down below. Do you like it? Do you hate it? What investment would you like them to bail you out of? Thanks for joining me today, and as always, be safe out there.